What's up, guys? Today we are talking chocolate, and not just chocolate, but cocoa. We've seen cocoa prices sharply higher as the global cocoa deficit widens. Before we dig into this article, I know some of us are visual, especially in this trading game and investing game. So, let's look at the chart of cocoa prices. This is the cocoa future index. Here's the 5-year chart. We could see cocoa prices at, a striking 5-year high. We go to the max chart, guys. It is an all-time high right now for cocoa prices. So what does that mean? You're probably saying, you're a dividend investor. Why are you looking into cocoa prices today? We're going to talk about it. If you've been, pretty active with this channel and community, I had a video that came out in the beginning of February talking about Hershey stock being a buying opportunity. And now this deal could get a little sweeter um, as we dig into this news, guys. So in today's video, we're going to go over a lot of the issues, they're having with cocoa prices, but we're also going to see, okay, how has that affected Hershey? And does this create kind of a buying opportunity for us in Hershey? So, before I even get into the details, let's think about this. If we have macroeconomic news, guys, in this case, it's cocoa prices, and we have a stock or a company that, works closely with this market, can it create sort of a buying opportunity or an arbitrage if the company's underlying fundamentals remain solid and the news, brings down sentiment around that sector? Okay, hopefully that wasn't too confusing, but I think it'll start to make a little more sense as we dig into this, guys. So, like I said, cocoa prices sharply higher. Let's get into it. I'm using a article today from Rich Asplund with bar chart, guys. And he talks about, on Friday, cocoa prices rallied sharply on signs of deeper deficits, guys. So, this whole cocoa news has been out for a while now. And as time has passed, I think more analysts and investors are starting to treat this as more of a severe type of situation. We see the projected deficit. So, the deficit being a shortage of cocoa supply is expected to widen from 2023 to 2024 from 374,000 metric tons. It's going to widen from 74,000 metric tons to 374,000 metric tons, guys. So obviously 300,000 metric tons of cocoa is a lot, especially when we're already in a deficit. 2022 to 2023, guys. We see production is falling 11% year over year. Right now, Ivory Coast is the world's leading producer of cocoa. However, the diversification of where cocoa is produced is actually going to lead to kind of a bullish case for cocoa prices, right? Just like a lot of you get on here and say, oh, to have a good portfolio, we need diversification. Guys, it's the same way with cocoa production. So, if we have all the cocoa being produced in one area and something's going wrong, weather patterns, we'll get into a few other factors. There's not enough diversification to keep up with the supply of cocoa. Okay, this is fairly straightforward stuff. Okay, we talk about Nigeria. They're the 5th largest cocoa producer, and their exports fell 15% year over year to just 36,941 metric tons, guys. Wow. Let's move on. Actually, hold on. Just to put these numbers we went over earlier, the deficit by the end of 2024 is expected to be 375,000 metric tons, guys. The number one producer is going to be able to ship 1.16 million metric tons. Okay, that's the number one producer of cocoa. So, now that we see what kind of numbers they're churning out in a year, I guess it puts this deficit in a little more perspective. We'll move on to a few other factors, guys. And, what's been leading to some of these, shortages of cocoa? It says here unfavorable growing conditions and crop disease. Obviously anything in kind of the agriculture space is going to be very dependent on weather patterns. You know, Avoiding any type of disease, guys. I grew up in Indiana. The rumors are true. There is a lot of cornfields. It's like one year you could see way more corn, and the next year maybe it's not as good of a harvest. That was a stupid example, but it's kind of the same thing for cocoa. And right now, the harvests are not looking too great. And they're spreading over West African farms, slowing cocoa production and, essentially driving up the price of cocoa. Guys, I don't want to spend all day repeating the word cocoa, but, the bottom line here is this is an issue of supply and demand. Right now, there's more demand for cocoa than there is supply. Okay? As investors and even a lot of these companies involved in the industry, they don't know how long this mismatch or deficit is going to last. And, the uncertainty there is going to lead to a lot of negative sentiment in these stocks related to cocoa. So, transitioning on about what this video is about, guys, we are going to be talking about Hershey. Obviously, Hershey is very dependent on their cocoa suppliers. I mean, I don't think I need to sit here and explain that Hershey, a primarily chocolate and sweets company, relies heavily on cocoa. And, that price of cocoa is going to hit Hershey's cost of goods sold, right? So as cocoa prices creep up, Hershey is continuing to buy the cocoa. That's going to shrink their profit margin. And that's how a lot of the negative sentiment around this has hit Hershey, if we can explain that in plain terms. But there's one thing that's interesting to me that kind of has jumped out to me. And so Hershey reported earnings for Q4 in February, and they actually had solid growth. We can see right here, despite a tough macro environment. So obviously this tough macro environment being cocoa shortages and higher prices, guys. And we will look at the numbers. However, let's just look at this from kind of a broad point of view. Hershey was more profitable in 2023 than 2022. Okay? Do we understand that? With all factors of kind of their main input, cocoa, skyrocketing in 2022, Hershey was still able to grow their net income. Okay? So if we can wrap our heads around this, management has been able to essentially create a solid growth year right here. We talk about it, and we will look at the numbers, guys. I'm not just making this up. Despite having, pretty horrible supply chain issues. Okay. However, with that being said, what have we seen happen to Hershey's share price? We're on kind of this dip, and we've kind of been on this dip since I've kind of been covering Hershey since February. Okay. So, we see this rapid sell-off when kind of sentiment around this one shifts. I mean, a part of this was to do with the Ozempic drama that came out in 2023. People are eating less sweets. So in 2023, Hershey had a lot of what I would call sentiment headwinds between Ozempic and negative feelings or fear around kind of the cocoa industry as a whole. And as a result, it has sold off. Okay. Now most investors are going to come out and they're going to say, stay away from this one. There's a lot of uncertainty. Me personally, I don't currently have a position in Hershey. I've wrestled with the idea for a while now. I've got kind of a note here, 170 and a bunch of question marks. I am on record of stating that is a price level I'd be very interested in this one, but we're going to take this in kind of a different direction, and we're going to ask ourselves as investors, are these headwinds between the Ozempic drama, which I think a lot of that's smoothed over, and now, more and more negative sentiment around these cocoa prices coming out, is this going to create an opportunity for us as dividend investors in 2024, guys? Let's take a look at it. Just so I'm not rambling and reading, titles of articles. First off, we're going to look at net income, guys. Well, let's see what some of the headlines are now. Presents. Okay. So their guidance came out obviously with earnings. Morgan Stanley is bearish. I try to stay away too much from analyst analysis. I try to do my own personal due diligence on stocks. And again, guys, I'm not telling you to buy this one, but I do want to bring this up. And I do want you to start thinking, okay, where can I identify opportunity? Okay, so let's take a look at Hershey, December 2019, 1100, December 2023, 1800, or I guess almost 1900 in net income. Guys, you would have expected, based on the sharp spike in cocoa prices in 2023, you would have expected Hershey's net income not to grow. I think that's a logical assumption, okay? However, they were actually able to grow their net income, over 12 and a half, 15%, just doing the math off the top of my head. So while Hershey's net income has grown, we saw this, rapid sell-off in 2023. And it seems like things might be getting worse before they get better from my perspective. There's more and more news and articles and, more fear coming out about this whole cocoa thing. So, from my point of view, how am I going to treat this one as a dividend investor, guys? Right now, let's take a look at Hershey's dividend summary. Currently, they're yielding 2.91%. And, I'm kind of going to go number by number here to make this understandable. That 2.91%, it doesn't get me as excited as, if we saw this 3.5, 4, something like that. If we saw it a little higher, I mentioned that 170 level. Let's see what type of dividend yield that would get to if Hershey did reach the 170 level. And to do that, we'll take their future annualized payout of 548 divided by that 170. Okay, that would get me to a 3.2% dividend yield roughly. I think that would be a little more attractive. However, I don't think the current yield on Hershey is necessarily the selling point. Okay, I think it's this payout ratio, along with kind of their track record of increasing their dividend, right, guys? So their 5-year growth rate here on Hershey is 11.16%. And, if you keep up with a lot of stocks, specifically dividend stocks, you will notice this 11.16% 5-year growth rate is, much more impressive than a lot of these other guys we've seen. Well, to put it in perspective, let's look at We'll look at Coke, which is another consumer staples guy. Their 5-year growth rate at Coke is only 3.36%. So maybe that was an unfair example or an unfair comparison, but so be it. And then this payout ratio, guys. This keep in mind, this is the earnings payout ratio. We will peek at the free cash flow payout ratio. It's 46.47%. Okay, what does that tell me? Not even half of Hershey's earnings right now are going towards returning shareholder value in the form of dividends, guys. This allows the rest of that earnings or free cash flow to develop new products. Maybe they need to think about, okay, how can we be more efficient with the cocoa we do have? Okay, how can we introduce products that don't use as much cocoa? Does that make sense? How can we introduce other types of sweets and candies that don't use any cocoa? Okay. Do we understand that? They have capital, they have cash to play with, and their dividend is still sustainable and still growing. I want to talk about here this dividend growth of 14 years. And I think this is a point that's not brought up a lot, guys. Let's get into it. Everyone, I think there's a general tendency when you start out dividend investing to look up, okay, list of dividend kings, list of dividend aristocrats, and to kind of say, okay, these guys have been paying a dividend for so long. I need to find, the best opportunity within this list. And I've come to find out sometimes when you see a track record a little shorter, but still, proven, and the company has still proven that they're dedicated to growing the dividend, oftentimes that's where you're going to get those sweet yield on cost plays. I keep saying sweet, and I think it's so funny. I don't know why. So just to illustrate what I mean, guys, let's go over to Johnson & Johnson. Again, I don't know if I'm picking perfectly comparable examples, but I think Johnson & Johnson is kind of like, oh, this was actually a great example. I think Johnson & Johnson is oftentimes like the stereotypical, dividend stock. For whatever reason, it seems to be kind of a stereotypical guy. Their track record is 61 years of dividend growth. Okay? Their starting dividend yield right now is 2.94%, almost in exactly the same starting yield as Hershey. Do we see that? I can't remember. Was Hershey's 2.92, 2.94? We'll call them both 3. However, Johnson & Johnson has that 61-year track record, and now let's see what story their 5-year growth rate tells. It's a lot slower than Hershey's, right? So sometimes these younger guys, the point I'm trying to make here, sometimes kind of these newer guys to this dividend growth game. I mean, 14 years, that's not like super new in the grand scheme of dividend growth. I'd say this is a newer guy. Sometimes investors are able to capitalize on a much higher growth rate of the dividend because, X stock is newer to the dividend growth game. They haven't been growing the dividend as long, and that can really, increase an investor's yield on cost a lot faster. Okay. I hope I made that point as clear as I could. Not to say, I do want to make a disclaimer, not to say that this 11.16% growth rate is going to continue for, years to come. Guys, this is just historical on a 5-year basis. This does not guarantee future growth. But I think a lot of newer investors tend to overlook this idea, and they tend to think that, oh, the longer the track record, the better. And they don't necessarily see that sometimes the younger guys are growing the dividend a little more aggressively just because they're less mature in the game. Okay, there. I said it. I feel like I said it there in easy to understand language, but now let's talk about kind of what I what I am going to do in this one, guys, again, I'm not making this video to tell you to buy Hershey right now. I said I am on the sidelines, but I will say this. If you never had to take any sort of calculated risk in investing, you're never really going to you're never going to find that outperformance. Okay. Hershey aside, guys, there's going to be other examples. There's going to be other companies that may be facing some headwinds, and it's up to you as an investor to do the due diligence, decide if you want to be a part of it. And regardless of if you take part in it, you need to learn from it. Okay. We need to learn from situations like this, guys. I'm not an NVIDIA shareholder. I don't plan on becoming an NVIDIA shareholder in the near future. But, I think we can all admit in the dividend investing community, that's kind of a miss if we weren't able to, participate in some of the yield on cost as well as capital appreciation, that NVIDIA shareholders experience, guys, right? Am I making sense here? So with Hershey, here's my plan. I'm going to keep an eye on it. I'm going to try to get kind of a gauge of sentiment around it. And what I mean by that is just, what are other investors saying? Are other investors panic selling? Are they, doubling down in their positions? And I'm going to try to get a gauge of, what this dip looks like on Hershey. Historically, and I guess a while ago, I marked out on my chart, anytime Hershey has come below this, 200-week moving average, historically, it's been a good buy. We do see Hershey under that 200-week moving average today. And I guess it's kind of my job to say, do I think this is as deep as the dip is going to go? Do I want to dip my toes in? How do I want to approach this? Guys, I will keep you updated on the channel. It's something to think about. Again, I'm not saying to go out and buy Hershey, but I will say this. Anytime, we have free lessons like this in front of us, guys, it's your job as an investor to take advantage of them, to learn from them, whether it's just on your computer, whether it's, in your head, you're not actually trading real money, guys. Watch stocks, keep a watch list, kind of brainstorm different ways you could play things, guys. And like I said, if I do enter a position in Hershey, I'm obviously going to keep everyone updated on the channel. You guys know I do the monthly portfolio reviews. I really like doing those for you guys. I actually had one come out today. I probably need to respond to a few comments. But as always, guys, take care. Let's build some wealth. And thank you so much for tuning in. If you're not subscribed, feel free to do that. I've never said, turn on the bell. If you want to turn on post notifications, feel free. Right now I am in a point where I'm posting one video a week. I've noticed it's a little better for me. It's a little better for the algorithm, as well as the quality of content I'm able to put out. 2 videos a week was kind of the original plan, and I felt like that was more of a chore than a passion, if that makes sense. So if you do want to turn on those post notifications, that'd be awesome. 1 video a week shouldn't be too much to keep up with, but we'll see where the channel goes from here. Thank you, guys. Have a great day.